Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, it was a heck of a wild ride, if I do say so myself, depending on which stocks you were invested in. Everything started off this morning, guys, with a GDP report that came in a little bit lighter than expected. So in today's video, we're going to take a look at that GDP report and see how it affected the markets. But we also had an overshadowing factor that affected most of all technology stocks on the day, and that was Salesforce's earnings, bringing the company down 20% and bringing all of technology stocks down with it over the course of the day. But the markets weren't too red. We did have some very healthy rotation finally coming in from financials and healthcare, which really acted to backstop a lot of the damage that was done after Salesforce's earnings. So in today's video, guys, we're going to cover that GDP report, and then we're going to cover one company earnings that I have prepared for you guys, and it's a big one, COSTCO, coming in with earnings after the bell today. Tomorrow, we're probably going to cover either Zscaler, Marvell, or both. So that's just what's going to be on the menu for tomorrow. But today, we're going to go into COSTCO. So GDP report first, COSTCO earnings second, then we're going to dive into technical analysis on our major market indexes and big tech stocks and see how things are shaping up to wrap up the month of May. And then, of course, guys, we're going to take a quick look into my portfolio and see how bad I got destroyed by Salesforce, unfortunately. So without further ado, guys, let's jump right into today's video. So SPY down about 0.66%, QQQ really taking the lead here in terms of the losses, 1.07% to the downside. However, we did have some very healthy rotation coming from financials, healthcare, and the bottom half of the market. So take a look at this heat map right here, guys. Very stark contrast to what we've been seeing all week. Usually it was the opposite. All of technology was leading and the rest of the market was red. Well, now we have a little bit of a flip day. Technology really taking a beating here, guys. You can see the big names, Microsoft down 3.38%, Oracle 5.5%, Adobe 6.5%, very big days to the downside, right? NVIDIA, AVGO not having that great of a day. And look at all your software applications companies, guys. Very, very red across the board. Even Intuit getting hit another 6% to the downside. CRM, your loss leader, almost 20%. ServiceNow down about 12%. And if I put I have a list here, guys, of these stocks that I trade the most often, and you'll see the ones that are the most red are all those software companies: CRM, CrowdStrike, Cloudflare, Adobe, Intuit, Oracle, Zscaler, Palo Alto Networks, Autodesk. The list goes on. Even our big boy NVIDIA here down 3.72, Datadog, Microsoft, Fortinet, which we've been over. All of your technology application software companies really getting hit hard to the downside by CRM. Very unfortunate day for them. So at least we did have the rest of the market to come and backstop the bloodbath that happened right here. On the one-day relative performance, you can see that even better how the most red sectors were communication services, led to the downside by Google and Meta, of course, our two largest components there, and technology, which is pretty much all the rest of the list that you see right here. So with that being said, though, on the 1 week relative, everything is now in the red. Yes, even with the bottom half of the market participating for this one day, we have to be reminded, guys, that for the most part, they have not been having a good week at all. Take a look at XLF, finally getting a little bit of a green day, but largely landslide since last Friday. And healthcare pretty much the same, finally coming in with a little bit of bids here, but it has not been a great week for the markets as a whole. Everything does remain down. So before we get into more technical analysis, guys, let's take a very quick look at our GDP report that came in this morning. And it came in a little bit lighter than expected. The expectation was for about 1.4% annualized, or quarter over quarter, sorry, and we got 1.3, slightly less than expected. Now, at a first glance, this could seem to be a slight negative for the markets, but we're going to jump into the report and see why that is not the case. Now, the light GDP report did contribute to bringing yields significantly down, 20-year and 10-year yields really coming down off of their weekly highs pretty much. And that's just because every time we have either the economy slowing down or the jobs market slowing down, it could pull forward those interest rate cuts. So that's why interest rates were responding to that data. But this is why the correlation between rates and your indexes, guys, is not always a perfect correlation, right? All the markets were down today, SPY and QQQ, while yields were down. So I agree with most people in saying that the correlation between the two is strong, but all the time, guys, you will see events where they do either move in the the same direction, so the index is moving up with interest rates moving up, or the counter effect, specifically when markets are moving down, yields also coming down. So the correlation really isn't perfect. We can't really say it's a perfect one-to-one inverse relationship. Now let's move into some of the GDP numbers, guys, and explain what exactly happened over the course of the day today, right? So in terms of the day today here, guys, we can see that GDP, key inflation rate revised lower as GDP growth slides. So we did get a little bit of a glimpse into the PCE report. Tomorrow, big day as well. PCE inflation report coming in first thing tomorrow morning. We always get the preliminary numbers with the release of GDP. So tomorrow's going to be the final revised numbers, but we do have some preliminary numbers here on that inflation data. And we're going to tackle all of those right away. So let's just get right into it right now. Let me get my slides up and pretty much here we go. So Q1 GDP. Now, GDP grew at a revised 1.3% annual rate in the first quarter, down from the 1.6 initial estimate. That followed very high growth of Q3, 4.9%, and 3.4% in Q4. Wall Street had expected a slight downward revision to 1.5% following the April sales report, which included downward revisions to prior data. Now, here is the points that are very important, guys. The PCE inflation data, personal consumption expenditures, rose at a revised 2% rate in Q1, down from the initially reported 2.5%. That is very, very, very good. Curious to see what the final number will be tomorrow, but if it comes in very low, guys, that's going to be very good for the markets. Now, most of the hit in PCE, so why did inflation come down? Well, we've been seeing that over the past couple of months. It came from a bigger decline in goods purchases. That is good. They fell 1.9% versus the initial 0.4 estimate of increase. So we have a nice little deflationary aspect in goods right now. Spending on services, however, remained a little bit elevated, 3.9%, a touch lower than the initial 4% figure. So most of your inflation, guys, is still coming from the services sector, and we've been saying this on the channel for the past 4 or 5 months. Now, Federal Chair Jerome Powell has indicated that they're watching final sales to private domestic purchasers as a proxy for underlying growth. Complicated sentence, but I'll explain it in the next slide. The metric, which subtracts net exports and government purchases, grew at a still solid 2.8% rate in Q1, though down from the initially reported 3.1%. This is the same thing that we had in the last quarterly GDP report, guys. We're going to bring this up right now, okay? Why does this matter? Why is Jerome Powell looking at only pretty much private domestic purchases and excluding the impact of exports and government purchases? Well, because those two things are in a little bit of an anomaly right now. So GDP, guys, is a combination of a few things. It's a combination of these 5 factors right here. More specifically, well, 4 factors: trade, consumption, government, and investment. Trade obviously is exports minus imports, right? So you want that to be a positive number. For the economy to grow, you want to be exporting more goods than you import. If you're exporting more, it means you're getting more money, and then you're spending less money to import goods. It gives you what they call an economic surplus in terms of net imports, right? So here's the reason why it matters, guys. This is why the 1.6, 1.3 number is not too big of a deal, in my opinion. Notice the government spending, extremely, extremely low in relation to our last year's worth of data. So obviously coming in so low, that is contributing to this number being a little bit lower, since the balance for GDP is an addition, a summation, if you will, of all of these factors. The number 2 thing, so Jerome Powell is removing the impact of lowered government spending. What he's also doing is removing the impact of the trade deficit. You can see right here, even though the blue squares aren't clearly represented, they're a bit hidden by the black dots right here. Trade was positive in the last 3 quarters. It's negative when it's below the 0 line right here. And you can see that in this quarter specifically, we have a net import problem, meaning that the US is exporting less than it is importing. So we're paying essentially more money here, which is contributing to bringing this overall number down as well. So you can see the impact of a negative trade deficit and also very reduced government spending. That is bringing the number down. Jerome Powell and the Federal Reserve are saying that if these 2 things were to return to our prior quarters levels on average, well, the number would be closer to 2.8%, which is very good growth nonetheless. He's essentially measuring the quality of the internal U.S. Consumer, right? When you remove the government actions and when you remove the net imports versus exports number, He wants to see how is the US economy doing on an internal basis, and that number is quite good at about 2.8%. So very decent GDP report, guys. Even though the headline number seems a little bit low, it's actually not that bad. The economy is still quite strong, still quite resilient, so no real red flags in that aspect just yet. Hope all of that made sense trying to clarify the GDP number. But obviously, guys, markets didn't react too nicely to that because it wasn't a very, very positive number at first glance. So we did have a little bit of a early market reaction here when we got the news, a little bit of a dip. We recovered the dip and then just slide into the tail end of the trade today. So moving into our next facet of the video, guys, we're going to be covering COSTCO earnings. And COSTCO, one of my favorite companies in the market, guys, even though they're down a little bit, 1% in the after hours, they absolutely crushed it again and again and again. It just goes to show this is why the company has such a high valuation, guys, because they are so consistent. Let's take a look at the numbers here, guys, right? 2% beat on EPS, which is very, very good for COSTCO, and a slight little almost 1% beat on revenue, double beat, and they really crushed every single other sales metric, guys. I will remind you, COSTCO is not a bottom line margin company. You can see their net margins are very, very thin, roughly 2.5%. That is not the goal of the company, and the CEO has been saying this for the past 15, 20 years, guys, right? The goal of COSTCO is to sell the most amount of stuff possible. It is a top line revenue growth company similar to Walmart, right? So that's why you're always going to see razor thin margins on COSTCO. Their goal as wholesale suppliers are to find you the best deals, mark them up by 2-3%, and pass the savings on to you. So you then talk to friends and family about how good the pricing is at COSTCO, and it attracts more and more members and generates that juicy membership fee, guys. That is the business model for COSTCO. So let's take a quick look into their earnings. COSTCO Q3 earnings beat all key metrics after shares closed at an all-time high. This is true. Prior to the earnings report, they were trading at a very fresh new all-time high. Now, moving into the numbers here, guys, COSTCO posted another bulk size quarter as consumers look for wallet-friendly prices on everyday essentials, and COSTCO is very, very good at that. Here's what the CEO had to say. We're definitely winning in consumables as we see the food business and dining away from home has softened up a bit. So people choosing to eat more at home, and COSTCO are definitely the kings of that, guys. You guys know, very tough to beat COSTCO's pricing on a price per kilogram basis. Now, this comes as consumers are looking for value in groceries. We know that inflation's high, prices are high, so people are looking for deals, and COSTCO is known for their deals. Now, in April, grocery prices jumped 1.1% compared to last year, but dropped 0.2% compared to March. That is very, very good. Just goes to show you that food inflation is not what it was last year, right? Very, very moderate inflation in food right now. As inflation moderates, consumers are returning to discretionary items led by toys, tires, lawn and garden, and health and beauty aids, said the CFO. So that consumer discretionary spending potentially starting to round the corner. But as I've explained in so many company earnings so far, when we looked at Starbucks, we looked at McDonald's, we looked at Walmart, right? The problem is, guys, this curve takes a very, very long time. You can't just snap your fingers and make people feel rich again, right? That takes time. Interest rates need to come down. People need to build up savings, and only then will they start splurging on all of these items. But COSTCO is noticing the start of the rounding of the curve. Very, very interesting. Now, the CFO in COSTCO won't need to enact wide-ranging price cuts like Target and Walmart to compete with customers. Very interesting. Buyers for the company. So these are COSTCO buyers, right? They have a whole sales team that calls all the producers and suppliers of all the things that you can find at COSTCO, and they try to get the best deals for you. Now, buyers are on top of pricing daily, weekly, and we review them each month. So we feel very good about where we are today and our runway to continue to be as competitive as we are moving forward. Very bullish comments by the CFO. Look at this foot traffic, guys, over and above everybody else by a very wide margin. Everybody else showing lower and lower foot traffic. We saw that, guys. Target's earnings, we saw them on Walmart's earnings. I didn't look at BJ's or Sam's Club, but you can see the net trend is to the downside, and COSTCO is not immune to that trend, but you can see how much better they are faring up than all of their wholesale competition. Very, very interesting, guys. Now, they also had leaps and bounds in their e-commerce sector. E-commerce is another bright spot with a 21% jump almost. Very good, led by gold and silver bullion, gift cards, and appliances. New app downloads grew 32% to 35 million. Very, very good, guys, right? Now, its logistics business saw deliveries increase 28% year over year. That delivery business competes with Best Buy and offers items like televisions, computers, appliances, tires, and even mattresses. Growing across the board here, guys. Now for the membership fees. Are they increasing them? Are they not? Still no, guys. Membership fees, a key revenue stream, came in line with estimates at 1.12 billion, a 7.6% increase compared to a year ago. Very healthy number. Now, when an analyst asked if it would raise fees, Miller Chip said that is still a case of when we increase the fee rather than if we increase the fee. So not providing any guidance in terms of increasing fees. Costco has not increased the fees on the memberships for about 5 years running at this point. They will do it eventually, guys, but as of now, no clear date as to when they're going to do that. Let's take a look at some of the company's numbers and slides just to show you how strong this company is. Absolutely crushed it, guys. Net sales, 9.1 growth, right? 9.1% growth. Absolutely amazing. Same store sales. You guys remember me going over these for Starbucks, Walmart. They were all 3-4%. Really not great numbers at all. Costco beating everybody, 6.6% same store sales. Comparable traffic, foot traffic is up, right? So not only do you have more people in the stores, but people in the stores are spending more. Great e-commerce sales as well. Such an amazing quarter. Here's your net income number for Costco, right? How much money they bring into the bottom line. That had about 29% growth. Very, very good. Growth on EPS, which is exactly what you want to see. Nice little healthy growth on gross margin, even though it's not a gross margin specific company. It's nice to see them still able to increase that bottom line ever so slightly. And you can see here that their expenses, so SG&A, selling, general, and administrative expenses, basically the cost of doing business, right? Marketing and all that stuff right there, did not increase as quickly as your gross margin increased. So that is positive operating leverage. You never want to see expenses rise quickly, more quickly than you're increasing your margins on revenue, right? So very, very good. Nothing bad to say about the company at all, right? Look at these renewal membership rates, guys. 90.5% worldwide membership renewal rate for Costco members right there. Extremely, extremely good. Here you see your membership growth. Again, 134 million total card holders, guys. Extremely, extremely good numbers. These numbers are just fantastic for Costco. And here you go. Here's your e-commerce sales. Very, very healthy. 21% gain in e-commerce sales. They're still in the process of opening new stores for the remainder of the year. Not that many, but still Costco opens about 35 stores every single year. So it's nice to see them following through with that expansion as well. So those are just a few of the numbers, guys. Costco remains such an amazing, amazing company. In terms of the valuation here, guys, I mean, the company is trading pretty rich right now, right? You can see that at $7.55 when we did their analysis prior. They really haven't changed much. I could redo these numbers live for you right now. As a matter of fact, let's do it because their EPS growth really hasn't changed. The revenue growth hasn't really changed. What's changed is their price. So this will get a little bit more expensive, guys. So let's take a look at their 2024 forward EPS. It's about $16.09. So if we do the share price, $8.15 divided by $16.09, that gives them a forward PE ratio of 50.65, a little bit high at $8.15. And if we divide that by their PEG ratio of about 6.1%, you can see that their PEG ratio, guys, is absolutely ridiculous. Or sorry, I took the wrong one. Let's do that again. Times, usually I have revenue above EPS, so I took the wrong one. My apologies. So let's just do this again. Times 6.1, get us back there. Or sorry, times 6.1. Let's get back up there again. So 50.65 divided by your EPS growth rate, my bad, is going to be 5.16. So the PEG ratio is off the charts right now. Very, very expensive company to buy right now. But then again, because they're so consistent, guys, they do benefit from a heightened valuation. Now, this valuation, guys, is very, very, very rich. You know what I mean? Like, it's very, very rich. A PEG ratio above 5 is extremely high. So I would not be buying this company right now. But then again, if I were holding shares, I really don't see any reason, any red flags to be selling off shares right now other than the valuation. Could be a decent location to trim some shares, but definitely not a reason to exit an entire position. So hopefully that makes sense, guys. Costco, for me personally, I know it's probably not going to get there, guys, unless something really bad happens in the market, but I really can't buy this stock, guys, unless we see some extended consolidation, maybe bringing us back down into the 600, 650 range. That would be the likely area where I may make another Costco swing trade. But for now, for me, 815, just a little bit too rich for me, despite how consistent the company is. So that's pretty much everything for Costco. Now let's move on to our technical analysis portion of the video, and then we will go see how badly I got destroyed on CRM. It was pretty bad, guys. Pretty much my worst day of trading in the last 2 years. All of it's been publicly shared on the channel, of course. So moving into SPY here, guys, well, they did it, guys. Unfortunately, the bears now do have the daily downtrend since we broke last Thursday's low. So daily downtrend is underway. We are entering the big zone of support. My infamous green box right here. Still some good moving averages in the way too. The 26 is right here. We're at it right now. And the 50 AMA on the daily about 516. Take it out to the weekly, guys. You guys know daily downtrend means weekly consolidation. And we can see that we're rolling into consolidation right now, right? So still looking for that weekly higher low, anything above 494.28, looking for that weekly higher low for further trend continuation, guys. The bulls are all in control right now. The size of this pullback is not enough to get me worried. It would get me worried if we really broke 512 to the downside. Still a lot of trading to happen before that. I do think that this 12 EMA on the weekly, 515, should be acting as pretty much our last line of defense for the bulls. Could get a nice little rebound underway. We will take this one day at a time, guys, but we have a lot more certainty than we had back here. Let's remember what happened back here, right? We had 3 to 4 higher than expected inflation reports in a row. Couple that with geopolitical tensions, right? That's really when the whole situation in the Middle East was very uncertain, right? Which led to a lot of market turmoil. Now, we're not that far off of these price levels from the past, but what we do have now is a lot more certainty. Right? Inflation seems to be peaking off its most recent run and starting to trend further to the downside. And the Middle East situation, although still extremely unfortunate, my heart goes out to anybody on either or side. Well, the heightened tensions are just not at the levels that they were back here. We have more certainty. So that's why I really don't believe that there's a high probability of us really flushing back down to these lows and falling apart down below here. Now, is there a probability? Yes, there's always a probability, guys, but it's not a very high probability in my mind. So we'll take this one day at a time. As of now, still just a very healthy weekly pullback after 4 or 5 weeks of upside. Now moving into QQQ. So QQQ also cutting Thursday's lows. So also losing the daily uptrend, right? We had a nice daily uptrend and a loss of these lows. No new all-time highs. So low, lower high, lower low. Daily downtrend is started right now. And then we are going to be looking to our lower zones of support. 447 down to 443. This roughly 10, 12 point range right there. That's going to be the level as long as we're in daily consolidation. This is your larger weekly level that we're playing off of. Huge area of congestion. Prior resistance is going to be big support. And we do have the 12 EMA on the weekly. 12 EMA on the weekly has supported these markets pretty much since the rally in November. And this is last fall. The conditions last fall were mass uncertainty, guys. Inflation was really starting to uptick hard. Yields were upticking hard as well. And Jerome Powell was very unkind to us. Extremely hawkish, pushing back rates, really drilling home higher for longer. And now, guys, at least we're in a position where we have a little bit more certainty on all those fronts. So that's why I say just looking for a little bit of a weekly higher low before probably the trend resumption. So still, all in all, guys, despite our most recent events today and yesterday, even with Salesforce earnings and whatnot, the market's holding up pretty good, all things considered. Now moving into healthcare, financials finally getting a little bit of a bid today, 0.54% to the downside, still in a daily downtrend. So now we will watch the size of the bounce in relation to 4150. If we can get all the way back up, let's say to 4131, this line of resistance right here, it would give us a decent sized bounce. Let's put the fibs on this, right? Because that's what we always have to do. So if we put the fibs on this, we would get, if we get up to this yellow line right here, it would be a 618 retracement. If we can get up to this 618 retracement, well, then it sets up the bulls to have a very good chance at setting up for the daily higher low and the daily trend change. If not, if we push it even further, the odds even increase. That would be the best case scenario in my mind, getting over and above this line of resistance and resetting the daily uptrend using it as support. That would be best case scenario, guys. But Worst case scenario, of course, we reject from here and set the lower lows and really drive into these lower levels of support right there. As of now, the bounce is underway, guys. The bulls have now regained or trying to regain the hourly time frames. So we'll see how long this bounce lasts. But what we need for sure, guys, if you want the SPY to stay alive, I've been saying it time and time again. Healthcare for the financials for the past 2 weeks have been crushed. The healthcare for the past 2 weeks have been crushed. QQQ has been doing all of the heavy lifting. So in the event QQQ pulls back, we need financials and healthcare to provide that healthy rotation to keep the SPY from dropping too much. The last thing you want to see for the next 2 weeks is all of your major sectors dropping at the same time. That would be an increase in fear in the markets. So far, we don't see it. It's still healthy rotation, right? So financials, what we're looking for here, guys, still looking to set the weekly higher low. Anything currently above 40.2, looking for that weekly higher low for the trend continuation. And we'll see how this weekly candle closes. But as of now, the bulls really doing a great job of playing defense at this 12 EMA. You can see they went below it here today, but refusing to close below 1 day of trading left. We will see, can they maintain this 12 EMA the same as they've done this entire rally since November, or will they lose it? That is going to be confirmed in tomorrow's trade session. Moving into healthcare right now. Healthcare not doing too bad on the day, getting a little bit of a bid here at 0.05% to the upside, right? Trying desperately to turn around the lower time frames. Nice engulfing move on the hourly. What we need now is an hourly trend change. When we get the hourly trend change, we measure the size of the bounce in relation to our most recent high right here, 146.89. That's a long ways up. So what we need to see from financials, guys, give me a bounce at least 50% to 144. The best case scenario would be the 144.62. That would be a 618 retracement, and it really gives the bulls the best chance at creating enough space to reset this into an eventual daily uptrend. So we will watch the size of the bounce when it happens. Obviously, if the bounce is weak and we get rejected by all these moving averages right here, well, expect a potential retest of the lows, if not a break of the lows. And then at that point, guys, we'll be looking to our weekly higher lows to prevent us from really collapsing here and setting the weekly downtrend anew. So as of now, the bulls still do have a little bit of space, but pulling back hot, guys. We really need to put an end to this sell-off very soon, because we've just hit the 618, guys. The 618 is that golden level, right? It does present the bears with an opportunity to flush this on the weekly, or just retake all of the gains that the bulls have put in, right? So coming in to a very notable area. That's why I need to see healthcare bulls really start putting in some work here. If not, guys, the SPY is really going to get plunged into a little bit deeper correction than it would be if QQQ goes down and XLF and XLV goes up, right? As I said, you don't want to see all three of them go down at the same time. Moving into semiconductors now. So semiconductors down about 1.38%. That's no secret there. Most of all your big names in semis, especially NVIDIA and AVGO, your largest weights, were down. So another red day for semiconductors, but at least they do have a lot of space. Daily uptrend still very healthy. Still looking for that daily higher low. Anything above 229.64, daily higher low for further trend continuation. Still no red flags, and coming down into this nice area of confluence. Previous all-time highs, the 12 EMA on the daily is right there as well. So could be expecting a reaction from the bulls, and then it's up to them to prove to us that they remain strong on the daily. If for whatever reason they give it up and set the daily downtrend, you guys know the drill. Weekly consolidation is underway, and we target our previous area of resistance to be acting as support. This is the breakout from the all-time highs, retest the all-time highs, and potentially run. So not looking too bad on semis. Moving into the Russell right now, 0.95% to the upside. This was largely due to your move down in yields. The Russell is more correlated to yields than the rest of your indexes. So you can see yields went down on the day, Russell having a nice little day of upside. However, we are still stuck in this daily downtrend, still just scouting a lower high and then potentially revisit of these lows. That is until the bulls prove to us that they can reverse this into a daily uptrend. Now, if we do plunge a little bit further down here, we are coming into a very big area of congestion, right? I keep pointing this out, guys. Huge support, resistance, big area of congestion, support one more time. So if we come down into this on the weekly, I do expect this area to be a big support zone for your bulls, looking for that weekly higher low to potentially start attacking the 212 level again. But as I've been saying in many videos, guys, if you really want to attack this large 212 area of resistance and break above it, you will need to see a consistent weekly downtrend on your yields and really start lifting up those risk on assets. Now, moving into the Dow Jones really getting hit hard over the past 2 weeks here, guys. It's just because the Dow Jones is a price-weighted index, guys. So it's not a market cap-weighted index where your largest market cap names represent a larger weight in the index. The Dow Jones is what you call a price-weighted index. So the stock that has the highest share price will have the highest weight in the Dow Jones. When you take a look at some of the names in the Dow Jones here, guys, right? CRM, they had a $270 share price. Crushed, right? Take a look at a company like Home Depot. Home Depot was also in the Dow Jones, right? What have they been doing over the past week and a bit? Net slide, and that hurts, especially when they have a $300 share price inclusively, right? Take a look as well at UNH, which is another name in the Dow Jones. Big declines, and they have a $500 to $480 share price. So all of your larger components of the Dow Jones that are that have high share prices, right? They have really been contributing to the index coming down. Not necessarily an indication that the Dow Jones is unhealthy. It's just to say the largest names in the Dow Jones in terms of share price have all been coming down, and the ones with lower share prices, such as your oil companies or even a company like Amazon, which has been doing very well because their share price is not higher than the ones of companies that's been declining. That's why they can't make up the difference just yet. So hopefully that was clear and an explanation as to why the Dow Jones is lower. So the Dow Jones really coming down hard here still, unfortunately, not daily oversold conditions, but we do have 4-hour heavy oversold conditions, and the Dow Jones usually doesn't get 4-hour oversold conditions for too long. Take a look back here. Last October, as a matter of fact, is the last time where we had these oversold conditions, and you can see when we hit them, we usually do get a little bit of a bounce, even if it does mean a lower low eventually. Oversold conditions usually do lead to a nice bounce, so we are currently waiting for that bounce on the Dow Jones, but I would be lying if I said the bears didn't undo, pretty much a month's worth of work at this point, right? They had a gorgeous daily uptrend going, loss of the daily uptrend. Now, eventually when the bounce does happen, same thing as we had back here, need to watch the size of the bounce. And unfortunately, we don't have multiple legs of downside like we had down here. This is one leg of selling. So our high is all the way up here, unfortunately. So the bulls at this point will have to put in a heck of a bounce, in my opinion, right? In terms of the size of the bounce, need to get at least as high as 50%, 39,000, and at best 39,300. That would be the location we're looking for here, guys. Give the bulls enough space to reset into a daily high or low and recapture this daily uptrend, guys. We need to get back above this most recent level of support right here, which is currently going to be acting as resistance. So if we can get back above there, maybe get rejected by the moving averages right here, and then sit on this support, reset the daily uptrend, that would be best case scenario. Worst case scenario, of course, is a very weak or continued plunge right here down into these lows and then reject on this previous support level as resistance and then revisit these lows, potentially even breaking them, guys. That would really undo all of the weekly push that was done in the month of April. And if ever we roll over that severely on the Dow Jones, we are going to be looking for further monthly consolidation, bringing us down into previous all-time highs. The monthly is still looking great here, guys, right? Monthly higher highs, higher high, higher lows, looking for that monthly higher low for the eventual monthly trend continuation. So although our short-term timeframes don't look too good on the Dow Jones, the long-term time frame looks absolutely fine. So hopefully that makes sense for everybody. Now let's move into our big tech names, shall we? So big tech, moving into Apple first. Apple up about 0.53%. Apple, one of the very few bright points amidst all of the destruction that happened in technology today. So love to see that. So Apple still currently battling with this overhead area of resistance, right? Remains to be seen. Will Apple break out and just continue this daily uptrend? That's what the pattern does show right now. Or will they break last Thursday's low and set us into a daily downtrend, which would be healthy weekly consolidation? Now, obviously, nobody can determine whether or not that's going to be the case. All we can do is give levels, right? What I personally would like to see on Apple is if we do lose this daily downtrend, lose this into a daily downtrend right here, and the stock does start its weekly consolidation, looking for the lower 180s, target 182 down to 178. This juicy pocket of support down here, all of your weekly moving averages are there, could be a great trade. breakout, retest of these levels, and then march on to the all-time highs. That is the trade setup that I'm personally looking at for Apple, because right now to initiate a trade on Apple, we're just kind of too close to resistance right now. And it does seem that the bulls, at least on the weekly, are kind of running out of momentum. Even though it's strong, it does appear that we're kind of tapering up at the top, and it's getting more and more difficult. So if the bulls do choose to daily downtrend here and go and get a little bit more support from down here before making that attempt, well, that's going to be a juicy location for Apple. But all in all, the bulls still looking extremely fine. Moving into AMD right now. AMD with a healthy little 1% day to the upside, but it really doesn't show, right? Really very sideways price action on AMD. The one good thing though, they are respecting this prior level of support right now. We are now using it as support again, and we are also above all of our 3 moving averages. The 50 is the pink one, orange is 26, and the 12 is your yellow line right there, respecting this very nicely. So when we have a tightening range like this, guys, it just means that the break is going to be fairly violent to the upside or to the downside. Now, we do have a fairly long lean bias just because of the overall semiconductor industry. When semiconductors are in a monthly uptrend, weekly uptrend, and also daily uptrend, well, usually you do favor the bulls for a type of breakout like this on an individual name. So that would be a break of the high from Tuesday's trading. Break of 173.65 confirms your daily uptrend, and then your next resistance is all the way up here at around the 180 level. However, if we do follow a downtrending cycle and break last Thursday's low and lose this support zone, well, then we probably will be retesting this lower area 155. Personally, myself, I believe this entire region, 158 down to about 140, I know it's a wide range, but this entire region does represent a great location to be building some swing trade positions on AMD for the eventual and inevitable weekly trend change back to the bulls, right? We can't forget AMD is the only other competitor to NVIDIA right now. Intel and Samsung are far behind, so I do believe this one will be a carry trade as a hardware infrastructure play, and I do believe this one will still do good things on the monthly, still just looking out for that monthly higher low for the monthly trend continuation. So your long-term bulls are in full control, which is why I'm looking to really pick these lows, get some swing trades on AMD for the eventual breakout. Now, moving into Amazon, give me a very quick second. All right, so Amazon, unfortunately, down 1.48%, right? So Amazon down about 1.48%, still trapped in this extended daily downtrend. We had a nice little bounce yesterday, and it was up to the bulls to set the higher low and move into a daily uptrend. Unfortunately, the daily downtrend simply continues. And when we have very shallow moves like that, we're not going to get daily oversold conditions here, guys, right? So eventually, to reverse this, the bulls will have to put in eventually the engulfing move and reset the daily uptrend. Still no sign of that. When you want to see that, guys, you need to see an extended hourly trend change. You can see there's been a few hourly trend change, but never breaking past the prior highs, right? You really need to see an hourly trend change engulf your previous highs, depending where you take the level at. So far, we have just not seen that. So what we need to see right now is that engulfing move happen on the hourly and give us a daily engulfing move as well. So far, no sign of that, just pulling down slightly into our area of support right now. Huge level of support, 177 all the way down to about 171 coming up into us right now. This daily downtrend obviously means that we're in a little bit of weekly consolidation, and the bulls still have tons of space, guys. Nice, gorgeous weekly uptrend right now. Looking for the weekly higher low, anything above 166, we'll just be looking for that weekly higher low for further trend continuation. This location right here, great swing trade opportunity for Amazon, in my opinion. Once again, that's 175 down to about 171, 172. It is all of your prior all-time high resistance that, since we're now above, should be acting as support for your longer term bulls. That's why I like it. Now, moving on to Google. Google down about 2.16%, and unfortunately, Google now in a daily downtrend, right? Loss of the 12 EMA, daily downtrend for Google. What does daily downtrend mean? Weekly consolidation is underway. So we will be looking for a higher low, anything above 165.50 for that weekly higher low for the eventual trend continuation, right? Google long-term bulls are in full control. Glorious monthly uptrend right now. So even if we get a little bit of a pullback right now, not that big of a deal. Looking for confluence, support, and the weekly 12 EMA are right here. And that is where I will be looking to play Google a bit more aggressively, right? 165 all the way maybe down to about 160, riding those short puts. So all in all, Google not looking too bad just yet. Tons of space between us and these weekly lows right now. But just the start of a potential daily downtrend. So if they do maintain this here, guys, the bulls really need to maintain these levels right here at the 165 line in the sand. All in all, though, no major red flags on Google just yet. Now, moving into Meta. Meta also down 1.5% today. So Meta still desperately trying to hold these lows here, guys, right? They've been trying to hold these lows now at 460 for about the past 3 weeks. And so far, the bulls are still doing a very good job of that. We're kind of trapped between two levels right now. Excuse me. So we're kind of trapped between two levels right now. Overhead resistance, which is a very strong one, 482, and the below support that we're currently acting on right now, 462. So similar to a couple other names, guys, tightening range just means that when we do break out, the breakout is going to be probably quite violent. Now, if we break out to the downside, guys, you guys know the drill. Just going to be looking for the potential weekly higher low for the weekly trend change. Take a look at the size of this bounce by the bulls right here, and they did bounce, you know, a healthy 55%. Decent. Not the best bounce, but decent. Getting rejected at resistance right now. So we'll be looking to set the weekly higher lows for the eventual weekly trend change. Where could we possibly set them? Look at the 26 moving average. We haven't lost the 26 moving average since Meta really started regaining control of the company back here in 2023. Really haven't lost. We've tapped it a few times, right, in recent memory, but we haven't lost it. So this would be my first location right here. That's around the 450 mark if we lose this low right here. And obviously to the flip side, if Meta can muster a little bit of a rally, need to see them break above 482, sit on it, using it as support right there. And this could be a juicy entry level for a swing trade. The stops would go below the lows right here, and your trade profit, your take profit would be above the highs right there. Very decent risk to reward here, guys, right? This level right here, if we're trying to enter around 482, 480, and our stop loss is $20, so we're risking about $20, but to the upside, all the way up to about 530, from 480, that's about $50, right? So about 2.5 reward to risk profile. Very, very decent trade setup, in my opinion. Moving into Microsoft right now. Microsoft really getting hit hard here today, guys. 3.38% to the downside. No secret, just because of its implications in the overall software as a service business, right? So Microsoft down a healthy 3.38. Daily downtrend, unfortunately, set off of your all-time highs, which means that weekly consolidation is currently underway. Good thing though, Microsoft does have tons of space here. Anything above 391, just going to be looking to reset weekly higher low and maybe move into no weekly trend change to the upside. Not looking too bad, right? We are still slightly testing our prior range of support, our range of resistance right now, which is support at 415. If we were to lose this, however, I do believe there is a great swing trade opportunity on Microsoft. If ever we dip down close, 405, 400, I really do believe this level will hold, guys. Microsoft is really not known to drop that much. As you can see, when the markets kind of really died off here in the month of April, we had that decline and quickly recovered. So if you do come down here again, I do believe the bulls will be able to hold this very big area of support that we've been holding all year at this point, guys. And Microsoft's fundamentals have not deteriorated. If anything, they've gotten even better, right? That's why I'm very interested for a swing trade over here. So we will see what happens for the company. No major red flags just yet, just a little bit of healthy weekly consolidation after 5 weeks worth of rally. Moving into Netflix right now. Netflix with a little bit of a red day today as well, but Netflix really in a glorious daily uptrend right now. So we'll keep an eye on this daily uptrend. Anything above 430 right now, just going to be looking for that daily higher low for the further trend continuation. We have this whole location right now that we're above. This previous resistance is now all going to be support. So it's going to be very tough for the bears to do something like this, right? So keeping that in mind, all of this prior support, if we do end up in a little bit of a daily downtrend on Netflix right here, it's going to be tough for the bears to smash through this area because of all this newfound support. The best they can probably do is send us a bit of a weekly consolidation down into the lower end of this range right here. 605, which is confluence with your 12 EMA, could be a nice little setup for that weekly trend continuation. No real red flags on Netflix just yet. As a matter of fact, holding up better than the rest of a lot of the big tech names so far. Moving into NVIDIA right now, NVIDIA with a little bit of a red day here. First red day pretty much after their earnings, right? Which is pretty much substantial. First red day after pretty much 5 massive days of green. So a little bit of healthy consolidation on NVIDIA. I was telling you guys, just watch for the loss of the hourly trend. And when you lose that and you lose the moving averages, your daily consolidation is underway. So at this point, we're just looking for a higher low, anything above 927.65, higher low for further trend continuation. Now, the preferred area for the retest is your prior all-time highs, but that is a very deep cut. I don't believe, especially for a company like NVIDIA, right? unless the overall market really takes a dump. I don't believe that NVIDIA can maybe get back to 962. Can it get back maybe to 1,030, maybe $1,000 and come down here before potentially resuming and tagging these moving averages? Absolutely, guys. So we'll take this one day at a time. NVIDIA still so much space, guys, just looking for that daily higher low for further trend continuation. And even on the weekly, guys, look at this glorious weekly chart, right? So even if NVIDIA does put in a series of daily downtrend events right there, just looking for a bit of a weekly higher low for further trend continuation. The only time NVIDIA can maybe pull back all the way here is if we get several weeks worth of consolidation. And then again, it would just be healthy weekly consolidation for the eventual trend continuation. No red flags there. Now, Tesla actually green on the day. So congratulations to your Tesla bulls, but I mean, not much was done. Still stuck in this very, very tight trading range right now. So still looking for the daily higher lows, anything above 172. Daily uptrend right now is protected. It's not pretty, but at least it's protected. Where it would fall apart is lose the 172. Daily downtrend would be started, and then we would be looking to our weekly bulls to desperately protect the 167 level. Lose 167, guys, and it's a weekly downtrend. That's why it's so important. So for now, bulls protecting as best as they can, need to see a break of 186.52. Break 186.52, daily uptrend is resumed, and then we really start getting some legs on a potential weekly recovery move. So far, not that much price action on Tesla, similar to other companies that are trapped in a tightening range right now. I do think when this thing will break, it will break hard. So a break to the downside, we will most likely be retesting the 161, and a break to the upside, probably retesting the 200 level. We'll keep our eyes peeled on those directions whenever Tesla does break them to gauge the sentiment of the follow through. Now moving into Palantir. Palantir, nice little day to the upside, 3.77% to the upside, and a little bit more in the after hours, even though they did give it a little bit back. You saw they had a nice after hours move here, kind of gave it back. So we'll see how this one opens tomorrow, but a very nice move. We were coming dangerously close to these lows right here. And we were saying if we break these lows, daily downtrend simply continues and weekly downtrend is back in motion. And then we'll just be looking once again patiently for the monthly higher low. So your monthly bulls are in full control. Great location, guys. 21 down to 19, right? Such a big level of support. And the bottom end of that 19, your 12 monthly EMA is right there too. But as of now, the bulls putting in some nice signs of recovery, need to get a break of 22.13. Break 22.13, daily uptrend is resumed. And then we will start attacking the big level of resistance sitting at this yellow line right here, $23. So all in all, decent day for Palantir. Still a little bit more needed in my opinion. If we can really get a clean break above these moving averages tomorrow, that'll be great, guys. We haven't really consistently recaptured these moving averages in a very long time. Call it about 2 months at this point, right? So we would like to see a little bit of daily leg higher, maybe get rejected at resistance, set the daily higher low, and then smash it to the upside, right? So we don't know if that's going to happen. That would be the optimal case scenario. All we can say is that as long as the stock trades between $21 and $19, it is a great opportunity for me to be writing short puts and some very juicy premium on the stock as well. All in all, great recovery by Palantir, starting off good, but the bulls still need to get the job done, right? The job is not done after 1 day of trading. Now moving into PayPal. PayPal, a little bit of recovery here today, 2.39%, but could not keep it up, right? PayPal actually had a very good day, almost 4% to the upside, but gave a lot of it back intraday, right after the morning rally. So they're trying, the bulls are trying to get out of this nasty daily downtrend. We now have an engulfing move, recapturing our previous lower high right here, engulfing move. Now it's up to the bulls to reset this into a daily uptrend. So they do have their work cut out for them. 1 day of trading is not going to be the end all be all. Still need to reset this daily uptrend in motion and get back above these moving averages, which is our next area of congestion right here. Only if we make it over and above 64, 65, will we be looking to potentially get some more weekly expansion underway, right? Because as of now, we are just trapped in a little bit of a weekly downtrend right now. So that's why I say we need to engulf our previous weekly higher lows around the 65 level to really start reversing some of these higher timeframes. So PayPal, nice job getting a little bit of work underway here. But to the flip side, if ever we were to lose this here, guys, I do maintain the next level PayPal is going to revisit probably $58, $59. That's where there's a lot more support. As of now, the bulls defending this area of support with their lives. So we'll keep our eyes peeled on how PayPal continues to move. So that's pretty much everything for your stock market rundown for today. Now let's take a quick look at my portfolio and see the loss PORN. All right, guys, so taking a look at the portfolio, well, it was not a very good day. Arguably my worst day of trading in the last 2 years since I've promoted this new trading public portfolio on my YouTube channel, right? The OGs on the channel remember my worst trading day last year. That was after we got assigned on SE Limited 1 week prior to their earnings on this Friday right here for about $58. And then we led into earnings right here and we lost pretty much everything, closing the position down here at $38. I had 3 contracts, guys. That was a $20 share price drop on 3 contracts. So that's pretty much $2,000 times 3. That was about $6,000 in losses, after which I closed the position. And we remained to have a very good year thereafter, just continuing to trade the strategy. Well, this year's worst day is, of course, with CRM. Very unfortunate day for the company, to say the least. Their worst day, guys. Their worst day since 2004. Put that in perspective, guys. It is pretty much 20 years that they haven't had a single day event like this. And to be more specific about the probabilities, just to show you guys how lucky I was, right? So it was a 3 standard deviation move. 3 sigma, which means that the expected move for the day on Salesforce was about 6%. Now, I was down here at about the 250 strike, right? We had sold puts at around the 250, and I had obviously loaded some call options here as well. So overall was a very bullish position. Now, I was expecting, at the worst case scenario, maybe a 2 standard deviation move. Salesforce is not really known to move more than 10%, but that's how much I had priced in. If we would have only had a 10% move, then I would have maybe only been underwater by about $5 per share, and I was willing to handle that. But a 3 standard deviation move, just to tell you guys how rare of an event it is. Not only is it the worst day in 20 years for Salesforce, but the fact that it was a 3 standard deviation move, meaning the expected move is 6% and it moved 20% over 3 standard deviations. If you know anything about probabilities, guys, right? So 2 standard deviations from the move is a 5% probability, right? But if you go all the way out to 3 standard deviation moves, it is literally a less than 1% probability of occurrence. And unfortunately, I was the lucky recipient of the inverse lottery, right? So very, 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 very rare move. You'd be hard pressed to find moves like this happen in the market on any given day, right? We see 2 standard deviation moves all the time where a company is supposed to move 10%, it goes down 20%, fine. But 3 standard deviations, especially on a industry leader in the space, such a solid company, right? Very, very rare occurrence. Now, where have we seen this in the past here, guys, where we've had some outsized, quote unquote, unfair moves to the downside, right? Really violent moves. We've seen it a lot this quarter on very solid companies. We've seen it, number one, we saw it last quarter with Palo Alto Networks, right? Huge crush, and we can see the shares are trying their best to recover. We saw it as well this most recent quarter with SMCI prior to their earnings, putting out forward guidance that was pretty much lower than anticipated. The share price did a great job of recovering since then as well. We also saw it on Netflix, where Netflix got unfairly hit after posting record numbers, unfairly hit, and now just a few months later, we are back to all-time highs. We saw it with Metastock as well, unfairly hit after earnings, and we are now pretty much back to your pre-earnings levels once again. We saw it on ServiceNow as well. ServiceNow, after their most recent quarterly earnings, they are pretty much down in the mud, and then just a few weeks to a month later, the share price did a great job of recovering. Obviously now getting absolutely destroyed off the back of the Salesforce earnings, but just to show you guys, it happens so much on very, very strong companies. JP Morgan, you guys remember me when I played some call options down here because I did not believe the move. It was very overdone in my opinion. Well, just a few weeks later, we are now all the way back up to our all-time highs. So CRM, guys, I'm not going to say it's a A++ conviction stock for me, the same as the likes of maybe Costco, MasterCard, Microsoft, Google, and Amazon, stuff like that, right? But it is an A setup for me, guys, in terms of just the quality of the company, what they're trying to do. So what Salesforce has been trying to do this year, guys, is after last year, there was a lot of activist investors that were complaining that Salesforce although they were growing top line revenues, they weren't doing enough to bring free cash flow and net margins to the bottom line. So Salesforce, the CEO, Mark Benioff, what he's been doing this entire year so far, the past 3 quarters, is they've been really driving for bottom line margins and free cash flow expansion. And the strategy is indeed working here, guys. If we pull up the quarterly margins, you can see their margins are actually incrementally going up. And if we take a look at their free cash flow as well, guys, their free cash flow is very, very strong right now. Look at these increases in free cash flow, the pale blue lines, right? You can see how great of a difference it's been since the lows of last year. So the company is doing exactly what the activist shareholders and investment managers has been asking from them. And unfortunately, since they posted, less than expected revenue growth, right? And obviously less than expected subscription growth, because the whole industry is pulling slightly back on software companies in terms of expenditures, right? A lot of companies are pouring a lot of money into AI hardware applications, and they're pulling back a little bit on software. We've seen that with cybersecurity companies getting hit a little bit to the downside as well. And you even saw it off of news on a company like Intuit, right? Intuit usually never moves like this, guys, never, and is down tremendously, right? So it just goes to show that sometimes a lot of these lines of businesses, they encounter a little bit of cyclicality in the markets and a little bit of nervousness. Now, CRM is not a bad company by any metric, and arguably down below here is a decent deal for the company. They will remain the #1 enterprise software company in the world. They will hold that title for years and years and years to come, guys, but it's just been affecting a lot of different companies, right? Adobe's been affected by this slight slowdown right here as well. So all these companies are being affected by the fact that in terms of the AI narrative, most of the money is going into hardware and infrastructure building right now. So far, not much has been going into software applications, because it's just not clear how much these AI investments are going to translate into future revenues for this company right here. So CRM taking the hit on the chin, and as a result, guys, our portfolios got hit on the chin as well. So we'll go through a few of these positions and explain what happened. So you can see here, in terms of the CRM, I had to close the trade, guys. I was a bit exposed, but we did keep a leg of the trade open. Now you can see I do still have the 295 calls for a month away. They're only worth 20 cents right now, so nothing much, right? So where did we close the CRM trade? Well, you guys can see we opened this trade on CRM. I'm not sure if it's here, but we opened it last Friday. Is it right here? Yeah, $1.80, and we closed them for a massive, massive loss right here. Let me see if I can pull it up real quick. Where is the CRM numbers? Closed at 250 puts, 10:35 a.m., $31, guys. So we lost, for all intents and purposes, guys, $3,000 on that short put play. The reason that I didn't want to hold it, guys, is because it still is $25,000 in capital that I can use for future wheel positions. So rather than wait and bank on the stock making a timely recovery and being trapped in the position for 3-4 weeks, I'd rather keep that capital and allocate it to different positions. What I will do probably, however, is average into the leap call option that I have on this company. It went down a lot, guys. We bought it in about 54, 51. It's down to about 19 bucks. Another $3,400 loss. So all in all, across, the leap option right here, this call option, and these short put shares, we're down closer to $7,000 on CRM alone. A very big loss for anybody to muster, that's for sure, right? What I'm probably going to do is I'm probably going to throw another one of these contracts at the stock and just wait. So dollar cost average into it, right? The exposure is still for 100 shares, but I'm getting the leverage of options, and I'm fairly confident that CRM will be able to get back above at least 240, guys, by giving it a year's worth of time. So we're going to try to recapture these losses by just holding leap call options, guys, and just waiting for the stock, waiting for the markets to really show some love back to this company that is still an industry leader in its field. So the DCA process is going to start, but I'm giving it a little bit of time, guys, in case we do drop to these lower levels right here, 210, 205, a little bit more, down to our lower area of support. Lower area of support right now. That is where I'll probably going to throw in an average on these leap call options. So that will give us a total position size that'll be fairly decent, and hopefully in the process, it'll allow us to recapture a lot of those losses. So moving on, guys, we still have a lot of the other positions. So we still have the SoFi covered calls by Friday. We'll see if we get called away. Palantir is now above 21.5. So we'll see if we get called away on those options by tomorrow. Still have the AMD 160 puts. Those are performing well. Should be worthless by tomorrow. AMD is roughly 167. Amazon's coming a little bit close now. Amazon's 179, 178. We'll see if we get assigned the 177.50s by tomorrow. Wouldn't mind if we do. Fortinet, $58 puts. Those are also potentially on deck for being assigned, but it's just one contract, right? They're literally at $58. If I get assigned here, not too big of a deal. My next dollar cost average for Fortinet, probably in the 51 level. We're going to try to milk this position for as much as it's worth because I love this company at these price levels. Then we also have Square, $68 calls, which are pretty much covered calls for our existing assigned position. Square's not doing too bad, right? They're just chilling around the $65 mark here, so not too far off of our assigned price. As I said in prior videos, I will DCA into Square one more contract if we get down to the lower $60 level, but I do want to ride this one a lot higher. Now, which ones did we close here today, guys? We had a few profitable trades that we did close. We closed the CLH options pretty much for almost worthless, right? 90% profit. We wrote the CLH contracts the day that they dropped the other day, right? So we wrote a $73 put right here for 40 cents, one for 35 cents for the 72s, and we were able to close those for pretty much 3 pennies each on the day today. So 90% profit there. Very happy with the way that went. We also had some HP puts, for short puts for the earnings, right? You can see those right here. Sold 2 for about 16 cents. Very conservative position. We closed them today for about a penny, right? HPQ, Hewlett Packard, obviously doing very good after the earnings. So able to recapture a little bit of profit there as well. And then the rest stands here, guys, right? So I still have these Amazon calls. The CRM short-term calls for June, I'm going to hold them open. What am I going to do? Close them for $20, right? May as well just leave this position open. And if ever we get super, super lucky and the market realizes it's an overreaction and starts bidding this one up fairly aggressively, like they kind of did for Meta and they kind of did like with Netflix within the first 2 weeks, well, we may be able to get some recapture value on these calls right here. And as I said, guys, in the event that the opposite happens and we drop a little bit more, I will be throwing in an average into my leap calls on CRM, closer to the $210 level on those. So we're doing the best that we can, guys. But then again, we did lose a bunch more money here on Intuit. Intuit coming down another 5%. I thought I was getting a very good deal at 614, only threw in 10 shares. So Intuit is quickly coming into an area where I do want to potentially dollar cost average into some shares right here. You can see that we're at the 560, 550 level. Big prior weekly level of support, right? We're also desperately looking to set the monthly higher low for further trend continuation. And these are your monthly higher lows. We're coming up close onto it, guys. 550, 560, pretty much right there. So I'll probably be averaging in a few shares because I do believe this company was also unfairly hit by this recent momentum to the downside after their earnings, after the CRM downfall as well. So that's just the nature of trading sometimes, guys, right? Sometimes you win some, sometimes you lose some, but my goal on the channel is to be as transparent as possible, show you guys the nice wins. Last week, we had wins almost around $3,000. And unfortunately this week, one of my worst weeks of trading, right? So you can see how quickly the emotions can change. The most important part, guys, is stay focused on the strategy, right? That's as long as you have a winning strategy, you should be able to prevail over time. Now, my biggest mistake in this trade right here is not doing some downside protection. Had I potentially bought just a few puts here at the 240 or maybe 230 level, they weren't that expensive. But then again, I didn't expect a ultra rare 3 standard deviation move, but I could have avoided it by just putting a bit of protection here at the 240s. It would have capped my losses and I would have been able to make some money on the puts to the downside. So definitely a big mistake here, guys, on my part, but such a rare occurrence. I can't be too mad at myself, guys, and never get overly emotional with yourself either. It's just not good. We need to just keep, even though we win, we lose, just need to show up for the next day here, guys, right? So I will survive the loss. This is one of my trading portfolios. I also have a long-term share portfolio that's been doing very, very well over the past couple of years as well. Right. So although it does suck that we do forfeit a lot of our year-to-date gains so far, guys, I will keep pushing forward and we will most likely beat the indexes. But the one thing you want to avoid, guys, is revenge trading or emotional trading. So after I was done with my positions on the morning, closing the loss and closing a few other profitable positions, I pretty much stepped away for the early day, went to the park with my partner, got my mind off of things so that way we can attack the charts tomorrow and the days in the future. Get over the loss, guys. To be emotional about a loss is completely normal, but it's how quick you get over those emotions that will really set you apart as a trader. Every trader that takes a big loss is going to feel some type of way about it. The most important thing we can do is get over it as quickly as possible. It is a business expense, right? It's the cost of doing business as a trader in these markets. We just have to learn from it. And the one thing that I do, that I will learn from it, guys, is when I'll lean so heavily bullish into a position, I will probably throw some insurance at it for the foreseeable future. This is just my mistake. Usually I do throw protection. You guys saw me throw protection on NVIDIA, but CRM just isn't known to move like this. So I didn't feel that it was particularly necessary. Sometimes when you see me play more volatile stocks, you'll see that protection come into place. I've done it a lot on the channel so far. I've done it on Tesla a bunch of times in the past in front of you guys. Just didn't think it was necessary on CRM, but that was my major mistake for the day here, guys, right? So hopefully all of that was insightful or educational, or if anything, maybe you get a little bit of a chuckle over me losing $7 grand. Who knows? Whatever, whatever you prefer, right? So if ever this video helped you out, guys, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel as well. If you're new here, we do these videos every single Monday through Friday. But I don't lose money like this every single week. As a matter of fact, you guys can see my performance over the last 2 years, and we have beat the markets quite regularly. And at the end of the day here, guys, if you do have any questions whatsoever, or if you want to grill me, or whatever you guys want, leave it down below in the comments, and I'll be sure to respond within the next 24 hours. So take care, guys. Challenging day in the markets. There will be brighter days ahead, and I still do think this bull market is just starting. So take care, guys. See you tomorrow after the close, and peace.